So we begin our discussion on chapter 28 of our text, which is financial statement analysis. I'd like to invite you to our reference material, the textbook by Brealey. So sorry about this, guys. It's taking quite some time to load. Okay. So let me go here to the main chapters. Okay, so in the next 2 weeks, 2 to 3 weeks, we're going to tackle chapter 28, chapter 29, and chapter 30. These are related. These are related chapters: financial analysis, planning, and working capital management. Okay, so let me. Okay, for chapter 28, which we're going to begin now. So let me just go through the contents. Okay, the page is, I'm having difficulty loading the page there. Okay, guys, can you hear me now? Hello? Hello, class, can you hear me? Hello? Class, can you hear me? Okay, I'm sorry, guys. I'm having some internet connectivity problems. So just please be patient. If I'm not able to really record everything, I'll share with you the recording of the other section. At least in the other section, we had slight difficulties, but here I'm seeing that it's becoming now more the disconnections are becoming now greater now. So please be patient, guys. I'm sorry if sometimes I'll be cut off. So as I was saying, guys, we're going to look at part 9 of the text, which involves chapter 28, 29, and 30. So what is this all about? The context here is that financial managers need to plan. I'll just read through some of the portions of this text. They need to plan not only for today, but to plan for the future. So that means they should be checking if they have enough funds, if they have enough cash to pay or to sustain its current operations, and also for future possible investments. That's a very important role of finance, making sure that the company has sufficient funds to sustain both current and future investments or requirements. So in the next chapter, we will look at how managers develop both short and long-term plans. Okay. However, it's important, before we come up with these plans, it's important to appreciate first, to understand how well is the company performing now. Okay? How well the company is performing is the subject of chapter 28, financial statements analysis. So we're going to look at several ratios, metrics that give us a hint, that give us an idea how well the operations is performing. How well is the company performing? Okay, so we're going to take a look at ratios. Now, ratios are very important, but take note, companies do not operate in a nutshell. Do not operate in a vacuum. I'm sorry, I used the wrong term. Companies do not operate in a vacuum, which means that they operate in an industry, and that there are other players or competitors that compete with them in the market. So when we look at the performance of a company, there are two things that we need to know. Okay, when we compute for the financial ratios, we do not just look at them as static numbers. We do not look at them at, for example, we computed a ratio called current ratio, and if the figure is equal to 2.0, then we cannot just outright say that the company is performing well, because current ratio is a measure of the proportion of current assets versus your current liabilities. So a current ratio of 2 means for every 1 current liability, there's 2 pesos of current assets. So is this good or bad? Now that question is very tricky, if that measure is good or bad, because we do not look at ratios in isolation. We have to look at it holistically from the whole performance of the organization, of the firm. So there's a need to benchmark the ratios. Number 2 benchmarks. Number 1, benchmark against time. Okay, so let me write that. Now, by the way, guys, I shared with you this worksheet. So we're going to use this worksheet in the next few sessions. Okay, so when we perform financial ratio analysis, okay, there's a need to benchmark the performance. As I was saying, okay, so let's use that illustration. One example of a ratio, financial ratio, is current ratio. Current ratio. Okay, let me write that. Current ratio. And current ratio is defined as equal to current assets over current liabilities. And let's suppose, guys, that the current ratio is 2, which means it is for every peso of current assets, there is 1 peso of current liability. Now the question is this good or bad? Is the firm performing well as far as liquidity is concerned? Okay, just by looking at this, guys, just by looking at this static 1 ratio, we cannot really say that the company is performing good or bad in terms of liquidity, because this is a measure of liquidity. Okay, we need to benchmark this performance. As we said, the company does not operate in a vacuum. So there are 2 things that we need to benchmark any ratio. Number 1, benchmark against time. Okay, benchmark against time. So for example, if this is the 2020 figure, question is, how much was the current ratio in 2019? How much was it in 2018? So we take a look at the and compare it with the historical figures or the past figures. So if the current ratio during 2019 was, let's say, 2.1, then we say that there was a reduction as far as current ratio is concerned. Okay, it means that the company is less able to pay its current liability as they fall due compared to 2019, or maybe in 2018 it was 2.5. So we can see here a deterioration as far as the current ratio of the company is concerned. Okay, so we benchmark it against time. Okay, the past year, past 2 years, etc. Okay, and not only against time, we benchmark it against competitors. So, for example, if let's say our company is company A and our current ratio is 2, and if company B, our direct competitor in the market, has a current ratio of 2.8, what does that say about the company, our company? Then we say that our company is less liquid as far as its capability to pay their current obligations, their current liabilities as they fall due. Okay, so these are very important things that we have to realize or know as far as financial statement analysis is concerned. We don't look at ratios in isolation. And also,
excuse me, sir. Hindi po namin nakikita screen niyo.
Oh, sorry. Allah, kanina pa pala ako nagsusulat dito. Okay, so my apologies, guys. Ayun, nagchat-chat na pala kayo sa akin, ano? Sorry, guys. Pag ganyan, guys, mag-interrupt na kayo, sabihin nyo na. Kasi minsan, I do not see kasi na nagchat-chat sometimes. Ano? Okay, thank you. So let me share the screen. Nawala kanina to. Ano? Okay. I'd like to apologize, guys. Ang dami ko na pala nasulat, tapos akala ko nakikita niya. No? So let me just recapitulate this. We were talking about current ratio, a ratio that measures liquidity, and the formula is current assets over current liabilities. So we say that the company has a current ratio of 2, or that's 2/1, which means that for every 1 peso of current liability, the company has 2 pesos of current assets to pay its obligations. Now, as to the question, is this good or bad in as far as liquidity is concerned, we cannot answer that. All we can say is that for every 1 peso of current liability, the company has 2 pesos. How can we now say that this is good or bad? Well, we benchmark, guys. We benchmark against time and we benchmark against competitors. And as far as time is concerned, if this is the current ratio in 2020, how much was it in 2019? How much was it in 2018? Usually we can go 2 or 3 years back. If it was 2.5 in 2018, then we say that there was a deterioration as far as capability to pay current obligations is due, as is concerned, okay? Because it's 2.5 compared to 2. Okay, so now it's 2, but in 2018, it was 2.5. So we have a deterioration as far as the capability of the firm to pay its current obligations as they fall due. In 2019, it was 2.1 compared to 2020. There was also a decrease in as far as that capability is concerned. Now, aside from benchmarking against time, we also benchmark against competitors. So if company A, our company, has a current ratio of 2, and company B, our direct competitor, has a current ratio of 2.8, then we say that we lag behind company B, our direct competitor, as far as our capability to pay our current obligations. Okay, so this in a nutshell, guys, is what we're going to explore here in chapter 28. Okay, be aware that we just don't look at ratios in isolation. So your output for this, there is one project that you have to do as part of your output for this subject, and it's to choose a company and its direct competitor, and then you're going to do financial statements analysis for that company of your choice, and benchmarking it against time and also against the competitors. So which means this is a group activity, guys. I'm thinking of either 4 or 5 members per group, and we will discuss when the deadline for this is. Usually the deadline will be around 2 to 3 weeks before the last week of classes. So we're going to create groups maybe by next week, okay, so that you can already start identifying your company and getting already the financial statements. And there should be no repeat, guys, no repeat of companies. You cannot, so for example, if one company chooses, let's say, Globe and Smart, okay, then other groups are not allowed to take that. Okay, so let me go back to what I was discussing a while ago. All right. Financial ratios, we say, are no substitutes for a crystal ball. Financial ratios are not magic numbers, okay? There are limits as far as what we can infer from financial ratios. Partly because, guys, these numbers are coming from, of course, the financial statements. And we know that when we talk of financial statements, there are certain principles that are followed in generating those financial statements. Okay, so this is one very important statement here. The ratios help you to ask the right questions. However, they seldom answer them. Okay, it's quite difficult. We can only infer to a certain degree. Okay, so that's the limitations of financial analysis. Okay, but be that as it may, we still have to do that. Okay. Okay, so 28.1 is all about ratios. Okay, so if you take a look at this diagram, this can also be found in the PowerPoint that I gave you. Okay, so if you take a look at this, it serves as a roadmap for this chapter, figure 28.1. If you take a look at the top part, it's really the optimal, the main objective of a business, which is to maximize shareholder value. Okay, and how do we answer this? Was the company able to maximize shareholder value? There are certain metrics that we can use in order to determine if this is so. Okay, how much value was created? How much value has been generated? We can use this measure, market value added, MVA, or MB ratio, market to book ratio. So that's the importance of ratios in this sense. We can have at least an idea of was management able to create value for the shareholders? And of course, this MVA, guys, this measure should not be taken in isolation. You can compute for 2020 but it has to be benchmarked against the previous years, 2019, 2018, and benchmarked against the direct competitor. In that way, we're able to complete a clearer picture of how the company has been performing. Okay, take note, guys, of that very important statement. Ratios should not be taken in isolation. Okay, ratios should also be taken in the context of other ratios. Okay, because some ratios are connected, which we will see as we go along. So, in as far as investment is concerned, is the company really profitable? Okay, are they able to generate not only accounting profits, but what we call economic profits? So this is a very important measure, the EVA, which we're going to discuss, economic value added. And there are other measures that seek to, there are other metrics that seek to measure profitability, like return on capital, return on assets, return on equity, return on invested capital, and so on. So we're going to look at them. So the context is always to maximize shareholder value. Okay, as far as investment is concerned, we answered these two questions. Is the company able to use its assets efficiently? Okay, in order to answer that, there are measures that we can use. We have the turnover ratios, turnover for assets, inventory turnover, receivables turnover, okay, payables turnover also. So these are very important measures that we will compute in order to answer the question, is the company able to make efficient use of its assets? Why is this question important? Because it's a measure of the investment performance of the firm. And the investment performance of the firm is important in order to see if the firm is able to generate or maximize or optimize shareholder value. Same thing, guys, with financing. Okay. With respect to financing, we need to compute the sustainable growth rate. How fast has the company been growing over the years? Okay. And how about its capital structure? Is its capital structure prudent? Is the company able to come up with a prudent financial leverage? And this can be seen through the debt ratios and even interest coverage ratios, which we're going to, of course, study also. And how about liquidity? We say that financing is important because it deals with the acquisition of funds, acquisition of financing, whether it be from the creditors or from the shareholders. Okay, is there sufficient liquidity in order to support the operations of the firm? Both its short-term requirements, or for the operating current year, or for long-term investments. Okay, so there are measures also for that. An example are current ratio, quick ratio, cash ratios. Okay, so this, of course, this does not include everything, all the financial ratios. We will be looking at other financial ratios, but they have their place in the maximization of shareholder value. Okay, so 28.2 is all about financial statements, and we'll begin with that. Okay, I'm sure your accounting subjects has prepared you to look at, to understand what financial statements are. 28.3 looks at, the example here is the company Home Depot. Okay, so there is a running discussion here about the financial statements of Home Depot. Then it's important, guys, that you read this, look at this, understand there are computations here. Okay, and please understand them. For our purposes, guys, we will not discuss this anymore because the examples are already here. We'll use another company and compute for the financial ratios of that company. Because anyway, for Home Depot, guys, it's already here, it's already computed. So kindly read through this, guys. So this is the income statement. This is the balance sheet. 28.4, this now begins with the measurement of the performance of Home Depot. So we start with the market values. We start with the computation of market capitalization. Okay, remember, guys, that for every chapter we'll have either 1 or 2 short quizzes. Okay, but mostly one, but there will be some times when we have two short quizzes. So please start reading this already. Then here we have the discussion of economic value added. Okay, this is very important, guys. EVA, we're going to discuss that. And also the other accounting rates of return. Okay, return on assets, return on equity. Okay, now there's not here. And then in 28.5, we have now measurement of efficiencies. Now you're required to read this. This is beyond the page, guys, page 753. Please read this because this is very important as far as financial ratios is concerned. Okay. All right. I'm just going through the chapter. 28.6 is another way to compute for the return on assets using the DuPont system. Okay, we're going to discuss that also. The DuPont system breaks down your profits into three. Okay, into three measures. We'll discuss that. And we have leverage, measurement of the ability to for the firm to pay its obligations. Okay, so you have the debt ratio. This is all about financing. Times interest earned, the TI ratio, cash coverage ratio. Okay, and then also the ROE, return on equity. Okay, and we're going to take a look here at the leverage ratio, or the financial leverage multiplier. So that's 28.7, and 28.8 is all about liquidity. Okay, these are very important ratios also. This is what I mentioned a while ago, current ratio, and then quick ratio or acid test ratio, and then the cash ratio. And last subsection is the interpretation of the financial ratios. Okay, so make sure, guys, that you read this. And that will be the end of the chapter, the summary, and then some further reading. And here are some problem sets, guys, that you can work on. Okay. And then there's this challenge sheet. We're going to take a look at some of these problems and solve them in class. Okay, so that in a nutshell is what we're going to discuss for chapter 28. I think we'll have 3 or 4 sessions about this, and this will be the first one. Okay, so let's now go, guys, to our Excel worksheet. Okay, let's start with having a quick review of the financial statements. Okay, so what are the basic financial statements that you have learned in accounting? Financial statements. So anyone? Yeah, Angela, please.
Income statements are changes in equity, financial position.
Okay, income statement. Okay, kabisado yata lahat ni Angela, no? Financial position or financial position or the balance sheet. And then what else?
Changes in equity, sir.
Number 4, statement of changes. No? Delta is changes in shareholders' equity. Okay, what else?
Cash flows.
Okay, statement of cash flows. Statement of cash flows, and then these are not formally financial statements, but they're very much part of financial statements. They are
Notes to the financial statements, sir.
Yeah, that's correct. That's notes of the financial statements. Thank you, Angelo. Notes to the financial statements. Okay. So quickly, guys, let's have a review, very quick review of what these statements are. So what's the, let's start with the balance sheet. Okay. What's the balance sheet, guys? What does the balance sheet, what information does the balance sheet provide for us? Anyone? How do you find the balance sheet, guys? Yes, Angelo?
The assets, liabilities, and equity of the company, sir.
Yeah, thank you. That's very good. Very true. In the balance sheet, you'll find there the, okay, Where's my pen? Okay, assets, liabilities, and equity, shareholders' equity. Okay, in fact, from here emanates the accounting equation. Assets is equal to liabilities plus equity. Okay, and the balance sheet is what, guys? It's a financial statement that tells us of the what? Financial blank. So this is the blank or blank of the firm at a specific what? Specific okay, Chloe tells us of the
It tells in the financial position.
yes, thank you, correct. Yeah, that's correct, Chloe. Financial position or financial letter S. Anyone? Financial position or financial STANDING. Okay, financial standing of the firm at a specific what? Specific specific what, guys? Balance sheet. Yan, ganyan. Tapos may ano, may nakalagay dun sa ilalim. Ano yan? Specific what? Specific. Okay, it's point in time, no? Point in time. Okay, that's why in the balance sheet you'll have XYZ, balance sheet XYZ company, okay, as of December 31 or December 31, 2021. So that means that on that day, December 31, the cash balance was this amount. Receivables was this amount. Because prior to that, it could have been different. The following day, January 1, it could be different. So it's a measure of the assets, liabilities, and equity of the firm at a specific point in time. Okay, so if we take a look at the balance sheet, what do we have here? We mentioned a while ago that you have the assets, the liabilities, and equity. So as far as the assets is concerned, guys, how is it arranged? What's the principle behind the arrangement of the assets? They are arranged according to how are they arranged, guys? Yes, Angelo?
Liquidity, sir.
Yes, okay. Thank you. They're arranged according to liquidity. Okay, liquidity. What's the definition of liquidity? Liquidity means its closeness to what? Its closeness to? Closeness to what? Letter C.
Cash.
Thank you. Who is that?
Angelica po.
Angelica, thank you. You're correct, Angelica. It's closeness to cash. Okay. So when we arrange, what are the major classifications of your assets, guys?
Current and non-current assets.
Current assets, okay. Current assets. Non-current assets, guys, will involve what are the classifications of your non-current assets? 1, 2, 3, 4. 4 major categories of your non-current assets are anyone? Yes, yes, Angelo. Angelo.
Hello? Sir, can you hear me?
Yeah, I can hear you.
One is property, plant, and equipment
Okay, where do I put that?
under non-cash assets. Sir.
Here, first, second, third, or fourth?
First, sir.
First, try one more.
As an order in the financial statement, sir.
Yeah, oh, yeah.
Okay.
So if it's not the first, it should be
Second.
second, tama. Yeah, dito siya, no? Thank you, Angelo. So the property, plant, and equipment comes after After your current assets, you have your non-current assets. There's one more here, and then PPE. Okay, you're correct. Thank you, Angelo. How about the others, guys? How about what should be here? What should be here? What should be here? Anyone? Raise your hand. Or
Sir, I don't know the number, but intangible assets are
yeah,
not.
okay. What do you think? Should intangible assets come before PPE or should it come after PPE?
After PPE?
Yes, correct. After PPE. Who's this, please?
Angelica po.
Angelica. Thank you, Angelica. So intangible assets, no? They come after PPE. Okay. So we have now the first in line dun sa non-current assets and the last one. Any other guess, guys? Intangible assets here. So what should be this one? L and this is O. Yes, Angelo?
Shouldn't investments be a part, sir?
So where?
Long-
Yeah, okay, you're correct. Thank you, Angelo. This is long-term investments. Okay, that's good. And also, how about this? Anyone else, guys, here? OA. OA, nice. It's OT S.
Sir, is it other assets?
Yes, thank you. Angelica, ito ba yan? Other assets. Okay, you're correct. Other assets, guys. So these are your non-current assets. So you notice, guys, these are arranged according to liquidity. So current assets are the ones that are quickly or easily converted into cash as compared to this one. So your current assets also has its liquidity order, 5. So what are these current assets? Okay, let's identify them. This is just a very quick review of your accounting subjects, guys.
Cash?
Cash,
Or-
okay.
Okay.
Okay, thank you. Cash,
Sir, short-term investments.
yeah, okay. Cash and cash equivalents. Angelo, saan yun? Second, third, fourth, fifth. Who answered short-term investment? Was it you, Angelo?
No, sir, it was me.
Who was it? Sorry, sorry, hindi ko nakikita kung sino. Was it who was it? John?
Yes, sir, John
Yeah.
Sebastian.
Okay, John Sebastian. Where do you put here short-term investments?
Second, sir.
Second, correct. Okay, you're correct. It's sandali. So this is short-term investments. Thank you, John. Or this is MS. What's MS? John, what's MS?
I'm not sure, sir.
Okay, sige. Balikan natin yan. Angelo, you're raising your hand.
Accounts receivable, sir.
Okay. Not only the accounts receivable, receivables in general. There are
Yes, sir.
different types of okay. And where will I find, guys, the different types of receivables? Because I just wrote you receivables. Where will I find the trade receivables, the notes receivables, etc.? The breakdown of that. Where do I find that?
They're broken down in the notes.
Yes, correct. Very good. They will be found in the notes to the financial statements. Okay. All right. What else, guys, for the current assets? Yes, Jasmine, you were raising your hand. Jasmine, sorry, I missed.
Can you hear me now, sir?
Yes, I can hear you now.
Inventories po.
Okay, inventories. Okay. Inventories. That's good. Okay, and lastly, guys. Lastly,
Prepaid expenses po.
okay, prepayments. That's good. Thank you. Okay, so that completes, guys, our the structure of our balance sheet. Of course, for the liquidity and equity, okay, let's just generalize it. For liquidity and equity, you first have your what? You have your current liabilities, and then your non-current liabilities or long-term liabilities. Okay, so we total this to have your total liabilities. And then for your equity, what will be the components of your equity? Okay, you might have your preferred shares if there is, common shares, okay, and sometimes you might have your APIC, additional paid-in capital, and then you have your retained earnings, and then you have your total shareholders' equity. Okay, so when you add your total liabilities and your total shareholders' equity, you'll have your, that should be equal to your total assets. Okay, now just one more thing, guys. As far as inventories is concerned, okay, is it correct to say that if we bought bond paper, okay, and if it's used for admin purposes, for the office purposes, assuming that we are a manufacturing firm, should bond paper be part of inventories? Any idea, guys? My question is, if we bought bond paper and if it's used for office. Now, thank you, Shirley. Sorry, I failed to recognize your answer. Okay, you're correct. Short-term receivables, nasa receivables yan, no? And inventory. Yes, Angelo?
Bond paper should go under supplies, sir.
Supplies? Where are supplies here?
Under inventories.
Okay,
Actually, no.
inventories. So, dun ba? Should it fall under inventories?
Prepayments.
Yeah, it will fall under prepayments. No? Prepayment siya. Kasi guys, ang inventories, it's only used for goods that are bought, that are intended for sale. Okay, so for example, raw materials. No? You work on the raw materials and to come up with your finished product, and then you sell it. Okay, so technically, yun lang inventories. So for a manufacturing company, you'll have 3 levels of inventories. What are these, guys? For a manufacturing firm, what will be your types of inventories? It will be, anyone, guys? So ito, for a manufacturing firm, tatlo tong inventories. Anyone? R, W, F. Okay, those are your levels of inventories. Could somebody please? Yes.
Sir, can I
Sir,
try?
Hello, Angelica. Sorry.
Oh, go ahead.
oh, no, no, no.
Angelica.
Go ahead, you
Oh,
go.
go ahead. It's fine.
Sige, sige. Mag-jack and point tayo. Sige,
Ako
Angelica, you
na.
have the floor.
Is R raw materials?
Yes, thank you. It's raw materials. What's W? Okay, Angelo, what's W?
Work in progress goods.
Work in progress or work in process? That's good. That's correct. So you have raw materials, work in process or work in progress. And then what's F? Yes, AJ.
Your finished goods.
Yes, thank you. Finished goods. Okay. So thank you guys for participating. I'm very happy because this is a very active class. Okay. I'm really elated with your reactions, your participation. Thank you so much. Now, if it's a service organization, for example, then let's say they have in stock there, let's say lotion or tonic, okay, for the hair, or maybe some for the face, or maybe some items for the for pedicure or manicure. Should that form part of inventories? Okay, again, the situation is it's a service organization, it's a barber shop, and there in the store they have they have quote unquote inventory of, let's say, hair tonic or alcohol, and then some supplies for something, or let's say some for pedicure, some for manicure. Okay, should that form part of the inventory of the company, of the service organization? What do you think, guys? Okay, anyone?
Yes.
Yes. John, yes?
Yes, sir.
Yes, your answer is yes.
Yes po.
Okay. All right. So partly that's correct, John Sebastian, that's correct, partly, no, but we have to qualify that. Okay. If those items are being used in the conduct of the business, let's say they have an inventory of hair tonic, because there are some customers who would have their hair done with hair tonic, for example, then that should not form part of inventory because it's not intended for sale. However, if these items are there to be sold to customers, okay, then that's the time it becomes part of inventory. Okay, so I hope that's clear, guys. The distinction: inventory are goods that are acquired with the intention of selling it. Otherwise, if it's used in the conduct of the business, then that should form part of the supplies, or that's part of prepayments. Okay, okay, that's good. So so we quickly reviewed what can we find in the balance sheet. Now, how about the income statement? What does the income statement tell us? It tells us of the, anyone?
Sir, it tells us of our profits and losses.
Okay, so in the income statement, sorry, Angelo, I missed your, who was that to answer?
Sorry.
Yeah, it's okay, it's okay. Who was that?
Vicencio po. Vicencio.
First name, please.
John,
Joe,
sir.
Joe. Okay, Joe, thank you. It tells us of the profits, costs, no, and expenses, and well, of course, sales. Okay. All right. So these are the components of your of your income statement. Sorry, but the income statement tells us of the financial what? Financial, or we call it results of what? Yes, there was somebody who chatted. Yeah. Okay, thank you, John Sebastian, for reminding me. Meron pa pala tayong, we were not able to answer this a while ago. MS stands for marketable securities. Thank you. Okay, John Sebastian, thank you so much. Short-term investment or marketable securities. Okay, that's very good. That's correct. Okay, thank you for reminding me. I almost forgot to discuss with you or to answer that question. Okay, so the income statement tells us of the results of the operations of the business or its financial performance. So this one has something to do with the financial performance of the firm. Financial performance or operating results, results of the operations, operating results of the firm at a specific what? At a specific what, guys? Specific. Okay, Lance, thank you. Yung gains or losses, yeah, you're correct, no? It's here. It's in the income statement. So it's sales, costs, profits, gains or losses. They're all part of the income statement. So the income statement tells us of the operating results, or it tells us of the financial performance of the firm at a specific what? Specific. Okay, specific what, guys?
Point in time, sir.
Point in time will be for your balance sheet, no? Point in time. Kaya yung balance sheet natin, if you take a look at that, let's say as of December 31, or you just see December 31, because it refers to that specific point in time. But for the income statement, it's what?
Period, sir.
Yeah, period of time to, no? Okay, this is period of time. Okay, because it's really based on a particular period. For example, 1 year. Okay, so for example, ABC income statement for the year ended, okay, or for the period ended. Okay, you're measuring the operating performance for one specific period. Of course, it can be a one-day period. Okay, it can be a one-day period. It can be a one-week period. It depends on the time frame that the company would like to measure its operating results. Okay, but usually you'll not find a one-day result, especially for big companies. All right, so that's our income statement. Now, how about the statement of cash flows? What do we find in the statement of cash flows? What does this tell us? Anyone? Tells us of the blank. Okay, Angelo?
The statement of cash flows is supposed to tell us where the flow of the cash of the company is going.
Okay, yeah, you're correct. Tells us of the flow, the cash, the flow of cash. Okay, so let's define that more. So it tells us of the what or the what of course cash from its blank and blank activities. Okay, at a specific blank. Okay, we have several blanks here. No? So the statement of cash flows tells us about the blank or blank of cash. So what's S? What's U? It's the, okay, number one is okay, this is sources. No? Saan nanggaling yung cash? Or uses. Okay? Saan ginamit? Saan nanggaling? The sources or uses of cash from its blank activities. Okay, yes, Angelo? Okay, sorry, hindi ko nakita ko sa inyo nag-raise ng hand. Okay, Angelo first, and then I'll get to you, Lance. Yes, Angelo?
First activity is operating, sir.
Operating, okay. Sige, thank you, Angelo. Share naman natin yung answer kay Lance. Ha? Lance, how about I?
It's investing.
Correct, Lance. Thank you, Lance. And AJ, what's F?
Financing, sir.
Yes, okay, good. Three of you contributed to this, no? Operating activities, investing activities, and financing activities at a specific what? Specific what? Anyone, guys? Operating. Sorry for my handwriting. Investing and financing activities at a specific blank, guys. Specific. Is it period of time or point in time?
Period, sir.
Yes, just like the income statement. No? We take a look at how cash, the flow of cash for a specific period of time, and usually it should be the same as your income statement. Okay, so that's what we can find in the statement of cash flows. All right, and then we have statement of changes in shareholders' equity. It just tells us about the movement of your shareholders' equity. So starting with the beginning, which is the balance of shareholders' equity, and then any movement that affected the shareholders' equity. Could be like additional investment from shareholders. Okay, also flowing back of operations in the form of retained earnings, additional retained earnings, to finally arrive at the ending shareholders' equity. So it just tells us what were the changes, okay? What were the movements or changes as far as the shareholders' equity is concerned for a specific period of time. Okay, and of course the notes of the financial statements, okay, these are qualifiers as far as accounts are concerned in your either income statement, balance sheet, or statement of cash flows. Otherwise, guys, without the notes of the financial statements, the balance sheet could be very, very long. Okay, it could be very, 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 very big document, a long document. It's good that the balance sheet appears as a summarized version, and then the nitty-gritty details are found there in the notes of the financial statements. Okay, so that in a nutshell, guys, what you have been learning for the past, I don't know, 2 terms or 1 term. We just discussed it in 15 minutes. Okay, because this subject is not really about constructing financial statements, although you'll have an assignment for next Wednesday because we don't have class on Monday. You'll be required to construct the statement of cash flows. I was told by the other section that in your accounting subject, you already learned how to construct the statement of cash flows. Okay, is that, how about you, for you guys? Is that true? I'm sure you were getting the same accounting subjects. In your accounting subjects, did you learn how to construct the statement of cash flows? Kindly chat yes or no, please. Okay, good. Good. So I think I'm going to ask you to submit and then we'll just compare notes on how you construct the statement of cash flows for this financial statements of Advanced Technologies. So I hope you have a copy of this Excel worksheet on hand. We'll now go to worksheet number 1, workbook number 1. Yeah, worksheet number 1, I meant. So this is financial statements, FCF, EVA, free cash flow, and EVA model. Okay, there's miss. So kindly correct this. Row 6, recent year should be, kindly delete recent year, Control X, and then put it here on row 7. Apologies for that. Okay, for this activity, for this exercise, we will be tasked to compute. Okay, number 1, kindly change this, construct the statement of, make it statement of not retained earnings, but changes, statement of changes in shareholders' equity. Okay, statement of changes in shareholders' equity and statement of cash flows. And then calculate the net operating working capital, the total net operating capital, NOPAT, free cash flow. So there are many things that we're going to compute in this worksheet. And I guess, guys, you haven't, in your accounting subjects, I don't think you measured this. No? I don't think you learned how to compute for your NOPAT, net operating profit after tax. Definitely NIAT, guys, you learned how to do that, net income after tax. But I'm guessing that you didn't learn how to compute for your net operating profit after tax. Okay, so let's go quickly to this financial statements of Advanced Technologies, starting with the income statement. So we have the income statement for 2020 and 2019. These are in millions of pesos, which means that you will have to attach 6 zeros here to really know the value of these numbers. So if I attach 6 zeros here, this turns out to be 3 billion. So the sales of Advanced Technologies for 2020 was 3 billion. In 2019, it was 2,850. Then we have here operating costs or operating expenses except depreciation and amortization. Okay. So we're singling out depreciation and amortization. We're separating it from the other operating costs. And then we subtract that from net sales to arrive at your EBITDA. Okay. What's the meaning of EBITDA, guys? It's earnings before interest, taxes, depreciation, and amortization. So that's the meaning of EBITDA. Let me write that. So this is earnings. Earnings before interest, taxes, depreciation, and amortization. So that's your EBITDA. Okay. All right. Now, I'd like to ask you, why is it that depreciation and amortization are being singled out among the operating costs? It's okay to single out. Usually, we subtract interest and taxes and separate it from the operating costs. This because these are interest is a financing cost. Okay, so that's why we separate that from the operating cost. Now, how about depreciation and amortization? Depreciation and amortization are operating costs. But why are we singling them out and separating them from the other operating costs? Any idea, guys? Any answer why we're separating it? Anyone? Why are we separating depreciation and amortization from the operating cost? Yes, Angela?
Because depreciation only affects the equipment that we use for sales.
Okay, it only affects the equipment. Okay, but what about amortization? Amortization is not linked to equipment. Okay, same answer as Lance, no? Is it because it is a contra asset account? Depreciation and amortization are not contra asset accounts, guys. Just by clarification, depreciation and amortization are expense accounts. So they're different from accumulated depreciation or accumulated amortization. Okay, so let's clarify lang natin na depreciation and amortization are not contra asset account. Yung accumulated depreciation and accumulated amortization are the contra asset account. Okay, so partly that could be a reason because they are linked to, as Lance said also, and Angelo stated that they are related to an asset account. But that's not really the reason. The reason why depreciation and amortization are singled out because these two most likely are the only two non-cash expenses. Okay, almost all, if not all, of the other operating costs that you will find in the income statement involve cash outlay. They are cash expenses. Depreciation and amortization are non-cash expenses. Okay, so when you take a look at the income statement and you find there depreciation expense 100, it does not mean that the company laid out 100, okay, as a cash expense. So they're singled out, depreciation and amortization, because they're non-cash. And secondly, we will need this amount, depreciation and amortization, when we construct the statement of cash flows. Okay, that's why it's convenient to single them out so that when we construct the statement of cash flows, readily available is the depreciation and amortization. Okay. All right. So, and then we have depreciation and amortization. We subtract that from EBITDA to get your EBIT, earnings before interest and taxes. And then you subtract the financing cost. Okay. So we subtract first the operating costs, and then we subtract the financing cost. In this case, it's interest. Okay. So you have here the interest for 2020 and 2020 and 2019. You now have your EBT, that's earnings before tax. Okay, then we subtract the tax, and we're using here Philippine rate of 30%. Okay, so here you see the formula F17 times 30%. Okay, here you have G17 times 30%. So you multiply the taxable base with the tax rate. Okay, now if you notice, guys, if you look at the other cells here, you will not find, except for lines 18, yung times 30%, you will not find here any value where you're multiplying it with the absolute. Ito lang, guys, where you're multiplying it with the 30%. Okay, the disadvantage of this, guys, is what if there was a change in the tax rate, naging 32%? Okay, so papalitan natin to. We're going to change this, and then we're going to change this also. So that can become cumbersome, and also there's a danger that you'll miss out on that. Baka hindi natin makita, no? Na dapat pala palitan yun. So the best way to do that, guys, is when you model in Excel, as much as possible, do not type absolutes in your formula. This is an absolute 30%. Okay, this also is an absolute 30%. That's not a good way to model. Okay, because in this class, we're not only going to learn finance, we a part of it will be financial modeling, and we're going to use Excel as the main software. Okay. Now, we can make use of this, guys. What I do normally is I set aside cells either on top of the worksheet that are my absolutes. So it could be tax rate, it could be some rates, guys, some rates that are used as a constant. Then I do that. Okay, so just by way of example, I can put this here. Of course, it does not look good now. Okay, tax rate. Okay, so that's my tax rate, 30%. Okay, so what we can do, guys, is we can, okay, we can name this cell. Okay, what I do is I usually name a particular cell. Now, if we take a look at this, this is C. Okay, C1, that's the address of this cell. All of the cells in Excel have their own addresses, and you can always find it in the name box. This is called your name box. So for example, if I go here, this is C17. So that's the name of this particular cell. They are generic names. However, we can give special names to cells. For example, this one, I don't want it to be named C1. Rather, I want it to be given a special name. Okay, and there are several ways to give names to cells. Okay, one way is just to go to this name box. So replace this C1. So let's call this, instead of C1, let's call it tax rate. Okay, tax rate. And the name should only be one word. There should not be any spaces. Okay, or you can use a underscore there. It's still one character, one full character, tax rate. Okay, so when we give a name to a particular cell, anywhere in your workbook, whether you're in a different worksheet, you can still access this, and it becomes very convenient to do that. Okay, so when you're modeling, guys, make sure to make use of this named range or named cell in Excel. Okay, so if I click this, enter. Okay, I now see that this now has a name. It's tax rate. If I click the button here, see there I have here sales that have names already. So we're giving this it a name tax rate. Okay, so what's the use of this now? So let's delete this formula. Okay, so let me delete this. So how do we compute for taxes? It's a taxable rate times, okay. Now I know the name of the tax rate, it's T. I can type T. Okay, when I type T, you notice, guys, that the functions and named range appear here. Okay, it's here, it's this one, tax underscore rate. This is the name that we use to give a name to 30%, right? Okay, or I can type TA, okay, and then X, okay, and we can see here that this is our name, okay, and then I'll just press tab there. Okay, so it's more intuitive, guys. It's more intuitive because I know that this is correct because I have given my cell a name tax rate. Now the beauty of this is that you can copy this. You can copy this to the right. Okay, and you notice that the formula is G17 times tax rate. Okay, so it means that they're fixing the tax rate. Okay. Any questions so far, guys? Okay, so now, okay, when this changes, for example, it became 35%. I just need to change this 35%. When this changes, guys, automatically it's reflected here. The tax rate is already 35%. So I don't have to go to all the cells where I type 30% as an absolute. Okay, so this is one of the techniques when you do financial modeling. Okay, so let me put it back to 30%. Okay, now there's another way to name it, guys. Another way to name it, I'll just show you here. Okay, notice what appears here. Create names from selection. Okay, this is very helpful, especially if you have several names. Okay, sometimes we would let's say name one, name underscore two. You have several names, guys. Okay, so let me just And you have several values here. For example, name 1 is 7%, etc. Okay, this is 8%. This is just an example. Okay. Okay, suppose we have this and we want to give a name to 7%. We'd like to give it a name. Name 1, 8% is name 2, etc. Okay. Now, how do we give a name to this? Well, one way is to go here, 7%, and write here name 1. And then go here, type name _2. But that will take long, guys, because you're doing it individually. So one of the best ways is to just highlight everything and make sure your name is either on the left or on the right. In this case, the names are on the left. Then I'll just press this one. See what happened, guys? Create names from values in the, now Excel is guessing. Are the names in the left column? Yes, the names, these are the names, guys. So this, I'm going to give this cell, this is L10, which contains 7%. I'm going to give it the name 1. Okay, so that when we click this, guys, click, then everything here, guys, have their names. Here, 7%, that's name 1. There, can you see that? 8%, that's name 2. Okay, so here are the names that were created there. Name 1, name 2, name 3, name 4, name 5. If I click name 4, it goes here to name 4. Okay, so what did I click, guys? The shortcut is, so highlight everything, the name and the value, and then Control Shift F3. Okay, so we get this. Okay. So can you please press Control Shift F3? I think for Mac, it's Command Shift F3, if I'm not mistaken. Okay, and then you'll have the automatic way to name your cells. Okay, so that's just a very quick way to name cells. Okay, any questions so far, guys? I'm running out of time. I have to discuss. We have to reach up to this point, guys, so that we are at par with the other section. Our goal is to finish up to row 78. Okay, any questions so far, guys? Okay, so no questions. All right, so we have here interest, taxes, and the net income. This is your net income after tax. Others call this the earnings after tax or the net income after tax. Okay, earnings after tax. This is earnings before tax. This is earnings after tax. Okay, so what do we do with the earnings after tax? You either distribute it as dividends and then, or some of it, a portion of it goes to your retained earnings, flowing back to the operations. So what's our dividend payout ratio? So in this case, our DPO, our dividend payout ratio, is equal to how much dividend was distributed from the pie available. So that's around 42%. And of course, the retention rate, okay? So the retention rate, sorry about that. Retention rate. So how much was retained, guys? So of course, that's 1 minus this one, or this divided by this, okay? So we know that this is equal to 100%. This should be 100%. Okay, oops. Sum of E21 up to E22. Okay, so that should be 100% because that's what we do with the net income after tax. All right, then we go to the balance sheet. Okay, we have assets. This is your total assets, total current assets, plus the PPE to get your total assets. Okay, so we see here that the company does not have any long-term investment, no intangibles, and no other assets. As far as current assets is concerned, you have cash and cash equivalents, short-term investments, receivables, inventories, but there's no prepayments. Okay, so this is the composition of the assets of the company. And then you have here, guys, your liabilities and equity. You have your current liabilities. You have accounts payable, accruals, notes payable. And then you have long-term bonds. If you recall, guys, bonds are long-term borrowings. Okay, And then you have common stock, retained earnings. You have your total common equity. And then adding your total debt and your total common equity, you have your total liabilities and equity. And then it should balance with the total assets. Okay. All right. So let's go here, guys, to the andito pa rin tax rate. Ano? Sorry about that. We could have used this. Okay. Now, since you said, guys, that you already learned how to construct your statement of cash flows, that will be your assignment for due on Wednesday next week. You're going to construct the statement of cash flows for this financial statements. Okay. All right. Then now we go to some measures. Okay. I think we're going to we'll be able to compute up to 78. Okay, so we have here number 1, net operating working capital. Now, some writers have different definitions about working capital. Many authors in finance would define working capital as current assets. Okay, working capital is equal to current assets. So they would use now net working capital to be current assets minus current liabilities. Okay. What we need, guys, is net operating. So it's NOWC. So it's not NWC, it's NOWC. And the operative word here is operating. So it's equal to operating current assets minus operating current liabilities. So why do we need to measure this? We need to measure this because we would want to assess the performance of the operations. Take note that for operations, guys, for operating current assets and operating current liabilities, we should not be including accounts that are more financing. No? Their impact or the control is more sa financing, hindi sa operations. Okay, so let's go up, guys. Let's take a look at our balance sheet. Let's take a look at our current assets. So we need to know what are our operating current assets. Operating current assets, we need to know them, and operating current liabilities. Okay, so our total current assets here involve 4 items, 4 accounts. You have cash and cash equivalents, short-term investments, accounts receivable, and inventories. Which of these, guys, fall under operating current assets? Okay, anyone, guys? Which of these? Yes, Angelo?
Accounts receivable, sir?
That's correct. Accounts receivable, of course, guys, it's operations. Huh? Because accounts receivable is generated by the operating performance of the firm. They sell on account, so they have to collect that. So that's operations. Okay, anything else, guys? Is it only accounts receivable that should be part of operating current assets? Yes, Angelo?
Inventories also, sir.
Yes, correct. Inventories. Thank you, Angelo. Very good. Inventories are also part of operating current assets. Diba? That's why we have inventories, is because it's part of operations. Companies buy raw materials, they work on it, becomes work in process, and then they convert it, work on it, and then they become finished goods and then sell. Of course, inventories are part of operations. What else, guys? What else? Okay, of course, cash and cash equivalents. Kaya that's why companies raise cash, okay, in order for them to support their operations. So cash and cash equivalents are part of operations. How about short-term investments? Short-term investments, guys, no. Okay, no, because this is more of a financing function. Operations does not engage in investing in short-term investments, investing in treasury bills. Okay, they don't go into that. No, it's not part of their role to invest in treasury bills. Okay, in commercial papers. That's not what they do, guys. So this is more of a financing function. So this should not be part of the operating current assets. So for operating current assets, we have these 3: cash and cash equivalents, receivables, and inventories. Now let's go to liabilities. How about operating current liabilities? Here are total current liabilities. Okay, we have this one. Okay, my digital pen is total current liabilities. So we have these three. Accounts payable, guys, is this generated in the course of the operations of the company? Yes. Kailan ba nagkakaroon ng accounts payable? When the firm engage in trade payables, the firm borrows, let's say, raw materials, they're given a term, for example, 15 days, 30 days. Okay, so there's what we call accounts payable. So this is generated in the course of the operations of the company. How about accruals? Accruals, guys, is it operating current liabilities? Okay, yes, Angelo?
Oh, sir.
No, what's an accrual, Angelo?
It's something that's recorded in the following month.
Okay, so accruals, thank you, Angelo. Accruals are expenses that have already been incurred. Nagastos na yan. Pero hindi pa nabayaran, but not yet paid. That's why they form part of liabilities. Example, utilities. Okay, a company is in manufacturing. Siyempre, they utilize power. Okay, so they consumed X number of kilowatts for the whole month. They already expended, but it has not been paid kasi yung bill dadating lang at the end of the period, no? Babasahin muna kasi yung metro, di ba? And then the company will be billed for that. That's an accrual, guys. Expenses that have already been incurred, but not yet paid. So is that part of operations? Yung accruals, accrued utilities, accrued telephone expense, kunyari ganun. Should that form part of operations? What's your answer, guys? Class? Part of operations ba yun, yung accruals? Answer is? Any guess, guys? Of course, guys, accruals are part of operations. Okay? Kunyari, yung sinasabi ko kanina, what I was saying a while ago, utilities. Okay? Utilities expense are incurred because the company needs the light, the water, etc. For their operations. Imposible naman na they're let's say cutting, they're doing cutting for the cloth or fiber and then walang ilaw, di ba? So accruals is part of operating current liabilities. How about notes payable? No. Kasi guys, this is interest bearing. Interest bearing to. Function ng finance yan. Okay? It's unfair to assess operations on accounts where they have no control over. Okay? Ang naghahanap naman ng ganyan ng interest bearing na utang is finance, no? So for operating current liabilities, dalawa lang yan, accounts payable and accruals for this financial statement. Okay, so let's now work on that. So let's compute now for our operating current assets and operating current liabilities. So this will simply be, our operating current assets will be just the sum of, for 2020, it's cash, comma, accounts receivable and inventories. Okay, so those three. So that this will be our formula, sum of F27, F29 to F30. Okay, Control Enter, and then let's home. I'll add one decimal place to it, so that it's consistent. Okay, I just use one decimal place for this one. Okay, and then copy to the right. We can copy it to the right. Okay, the formula here will be the sum of column G. Okay, we can do that because I specifically arrange our balance sheet and income statement in this form so that it will be easy to compute for this one. Okay, any questions so far, guys? We have 2 more minutes. How about operating current liabilities? Sum of accounts payable and accruals. Okay, we don't include notes payable there. Okay, Control Enter and copy to the right. Okay. Let me just format this. All right, then net operating working capital should just be the difference. So this minus this. So that's your net operating working capital. It's operating current assets minus operating current liabilities. Okay, then we go here, guys. I'm sorry, I have to finish this. No? Total net operating capital is your NOWC. We already have it here. So NOWC for 2020 is this one. And then NOWC there. I wonder why it's okay. Then you have net fixed assets, guys. Now in our balance sheet, we have net plant and equipment. So maybe we should copy this, Control C, just to be consistent. Control V. So it should be net plant and equipment. And this should also be Control V. This should also be net plant and equipment. Okay, now if you recall, guys, it's already time, guys. May I have 2 minutes just to finish this? Could you kindly permission, guys? 2 minutes lang. Pakichat na lang kung okay lang, guys. Okay, thank you so much, guys. Thank you. Okay, I'll assume, guys, that all of you are amenable to that. Thank you. Okay, so let's just finish up to konting ano na lang, guys, no? Okay, net plant and equipment, it's already here. But take note, guys, take note just by way of review. Yung net plant and equipment, actually, when accounting records it, it should be property, plant. So property, plant, and PPE, okay, and it's at cost. Okay, property, plant, and equipment at cost. Let's say this is 1,500, and then we subtract here. If you recall, guys, accumulated depreciation. Okay, and then PPE. So this is, let's say, 500. Therefore, our net PPE is equal to the difference between the two. Okay, so sometimes you'll see this one. Okay, sometimes you'll just see this one. Just be aware that net PPE comes from at cost first, and then the accumulated depreciation. Sometimes ito lang, and then again, this will be found in the notes of the financial statements. You can find here there's several types of PPE. Okay, because if we put it here, guys, the balance sheet will become so big. Okay, so long. Okay, so we have here net PPE. So let's just copy that. Okay, this is equal to net PPE is this one. It's 1,000. And it's this one. Okay, therefore our POC is just the sum. Okay, and lastly, guys, how much was the investment in total operating capital? For 2020, it was 769. For 2019, it was 15. So that means the company invested additional. So the difference between this is, oops, sorry, why sum? Not sum, but rather this minus this. Okay. So the company invested for 2020 an additional 280 million, 279.8 total operating capital. Okay. So with that, guys, we end our discussion. Okay.